This is an interesting thing, I guess. Across the board this week, we did see a pretty positive rally in commodities, and we'll see that later when we look at the top performers. I think materials is a sector that overall looks to be going through a pretty positive run at the moment. But gold, I guess, struggled a little bit to sort of reach the potential of a lot of other commodities through this rally for a couple of reasons. And you're right, it's definitely, this week it's really been like a person hanging off a cliff. Gold really trying to hold on to that $1,700 an ounce level, which is a pretty critical level. A lot of brokers are talking about it, and their price targets could vary if it breaks this or if it holds up and pushes higher. So it did have a pretty soft, volatile week. It was trying to get pushed lower. It was holding on very much. So it was up less than 1% for the week. And again, it's just a pretty soft, volatile week. Not a lot of movements, but I think it's really because there's probably an equal amount of headwinds and tailwinds at the moment for gold. If we talk about the traditional factors affecting it, we can still see the US dollar is surging at the moment. Treasury yields are also surging in the US. But as I said, a strong rally.
It was originally inflation. A lot of people would say it's an inflation hedge, right? That was the old narrative, which very clearly is not.
This time, especially through very elevated periods of inflation, it hasn't really acted as your traditional hedge, has it? Now,
I always think an interesting thing, because someone asked me a little bit about that before. I think a client of ours put a call through, and they were talking a little bit about, we were talking a bit about inflation and the traditional hedges, etc. And I sort of made the point that, hey, listen, if you're nervous, you just sell anything. Anything and everything you sell, and that's everything goes down, and we're seeing that a lot. Everything just goes down. Crypto, gold.
Yeah, a lot of things. I think across the board, what you've got to look at especially is through periods like we're going through this year. A lot of clients are ringing and ask questions about like what's going on, what's the outlook. Now this year it's so hard to guess because you think about what's happening in Ukraine at the moment. Like it's a very abnormal year for the market. COVID-19, in and out of lockdown across the world. What's happening in Russia and Ukraine? It's a very abnormal year. And through years like that is when you don't get those traditional movements in the market. So gold might not hedge as traditionally. I mean, if you look across the board this year, you're better off buying energy stocks as a hedge against inflation because of how elevated they are and the issues with supply.
And it's weird because everyone's always just talking all this. Yeah, everyone's just talking about the electric vehicles and you know, net zero by 2030. This is the year of net zero by 2030. Electric vehicles are clearly on the surge, but lithium, up until what I mean by quite recently, is very recently, was not doing well at all.
Exactly,
it had a huge pullback.
That's what I mean. It's definitely not a traditional year of movements in the market. And I think that's when, I guess, new hedges come about for a short period of time that are really based on those big macroeconomic trends like energy. So I guess, as I said, a lot of headwinds and tailwinds for gold. This week, they were unable to sort of grasp that full, I guess, commodity rebound because the US dollar was still surging, but they did still hold up. They're still above that $1,700 an ounce mark. So for now, just sort of consolidating just above that critical support.